Looking to buy a house with bad credit? Well, then you'll want to stay tuned because we're going to deep dive into how you can actually get that done and whether you're going to even be able to get qualified for a loan in the first place. So make sure you don't miss any part of this video. What's up, y'all? My name is Tomy Boboy, your credit and personal finance coach. If this is your first time on my channel, I'd just like to say welcome. Typically on this channel, I'm talking about things related to credit and personal finance. So if you're interested in improving your credit and achieving financial freedom, then be sure you hit the subscribe button down below so you don't miss any of my future videos. Now let's go ahead and jump into how to actually qualify for that house. Now, probably the first thing you're wondering is, should you actually improve your credit score first or just go straight into trying to get a loan? That's really going to depend on where your credit score is, okay? I think depending on where you fall into the range or the spectrum, then that's going to tell you what your best course of action is. These are some numbers I got from bankrate.com, which is a website that deals with specifically just like banks and different rates when it comes to it, and kind of focuses a lot on mortgages especially. So they kind of broke it down to this kind of score range. So if you have a score of 750 and above, then that's excellent. If you have a score of 700 and above, that's considered good, a good credit score. If you have a score of 620 and above, that's considered acceptable. And if you have a credit score of 500 and above, that's considered hard, right? Hard being, it's going to be a little more difficult to be able to qualify for a home mortgage, but might still be doable, okay, which I'll jump into further here soon. Now, right off the bat, what I typically tell people is if you do fall in the lower end of that spectrum, so let's say if you're in the hard to even the acceptable range, then I would say you really want to look at one thing, okay? You want to focus on, if you really want to get a house, you want to look at, do you have enough money saved up to get that house, right? Do you have enough money to be able to pay for a down payment on the house? Typically, you're going to be paying something between 3.5% to up to 20%, depending on what kind of loan you're getting. Now, it is possible to go even as low as 0%, though it's going to be harder to qualify if your credit score is on the lower end, okay? So if you're in a situation where you don't have that amount of the down payment saved up yet, then I would look at fixing your credit score, because they kind of go hand in hand. You could be fixing your credit score or improving your credit while you're saving up for that down payment. That way, whenever you do apply, you're going to get an even better rate, which makes the house cheaper for you. And you're going to already have the down payment, so it's going to be easier for you to get qualified. And for those of you guys who aren't sure how much you might need for a down payment, what I typically say is go ahead. You want to already do the research about what type of house that you want to live in, right? Maybe you already have an idea of a specific type of neighborhood. Maybe it's a neighborhood in your area that you want to move into. Maybe it's a neighborhood you're already living in. You just want to go from renting to owning, right? And so what you want to do is once you nail down an actual neighborhood, then you want to start looking at how much houses are going for in that area, and look for houses based off of what you think you would want in terms of, square footage, how many bedrooms, bathrooms, all that stuff, right? Try to nail down a few, at least get a general idea of what you want to look for in a house in that area. And it's going to start giving you a general idea how much those houses are going for. And guys, really, these numbers just need to be rough. It doesn't need to be like right on the dot. You want it to be something more so like, I know that houses in this area sell for $300,000 to $350,000. And then that'll give you an idea how much you need to save as a down payment, because you're going to need to save at least 3.5% of that amount. Right. So that kind of gives you a general idea how you can go about moving forward. Now, if you're in a situation where you have bad credit, but you have the funds, so maybe you had a lot of credit issues in the past, but now you're in a situation where you have a lot higher of an income than you did before, and you're saving a large majority of that income, right? Let's say this is just an example again. Your situation could very much vary, but if you're in a situation, if let's say I make $100,000, or let's say I make $10,000 a month, right, from my job, and I'm only spending $2,000 every month, right? And I want to just get a house that's going to be a $200,000 house. Well, that is not going to cost me, or it's not going to be that heavy on me in terms of how much it's going to add on to my expenses, because I'm already saving a lot of money month to month. If I'm in a situation like that, but I have a bad credit score, it might be a situation where maybe I want to do something called manual underwriting. That's pretty much where the bank, instead of just running all your information through a system that tells the mortgage lender if you're approved or not, they're actually going to have someone manually go through your all your financials and things like that. I'll be honest with you, it's a lot more tedious. It's going to be, it's really someone digging deep and really is going to ask you for a lot more documentation, but it might be the route that you want to go, especially if you don't want to wait for things to fall off your credit score, or for you to be able to improve your credit score and you want to take action now. Now, if that makes sense so far, or you're finding value in this video, be sure you hit the like button. That way we can get this video out to more people. And next, what I'm going to dive into is what lenders are looking for whenever they're actually looking at your records and your financials, so you have an idea what you want to make sure is looking really good and tip top. So typically lenders are going to be looking for a few different things. They're typically going to be looking for things like how much you have for a down payment, right? If you have bad credit, you can expect to have to put more money down for your down payment, just because if you look at it from a bank standpoint, your credit score, your credit report's kind of like you can look at it as a report card, right? A report card that we had when we were younger. Right? Teachers could look at it and see how we were progressing and how we were doing in school. Now, as adults, that whole concept's kind of followed us to adulthood. And now they can look at your credit report and see how you have been performing financially through your life. Okay. Whether you've been paying your bills on time, if you miss payments, if you let bills go into collections, things like that. Okay. And so the more that they see that you're not paying bills on time, you're letting things go to collections, things like that, then they're going to see you as more riskier than someone who doesn't have those things going on, someone who never misses a payment. Right. And so that's why they're going to want to charge you more interest. So your interest rate's going to be higher, and they also are going to want to have more of a down payment just to make sure that they can secure or you have a lot more skin in the game. So those are going to be some of the things you can expect to have to pay a higher down payment, especially if your interest rate is a little, or if your credit score is a little lower. Now, again, kind of like what I mentioned before, it can range from a 0% all the way up to a 3.5% to a 20% in terms of your down payment amount. Though you can get things as low as a 0%, things like VA loans and stuff. I'll jump into different types of loans you can get later. But yeah, it's kind of a wide range. But I would say that depending on where your credit score is, you just want to try to save as much as you can. Definitely above the 3.5% if you're on the lower end of the credit score, the spectrum. You'll want to save at least the 3.5%, but even more if possible, just to kind of give you a little bit more of a buffer. Now, another thing they're going to look at is if you have an overall low amount of debt. They're going to want to make sure that you have car payments, like if you have car payments, credit card debts, things like that. They're going to want to see that you don't have too much debt that you're dealing with day in and day out. And this kind of goes hand in hand with the next one that I want to touch on, which is how much income you have, right? The reason why they look at that is because it kind of shows them what your cash flow is, right? They want to see that you have positive cash flow, which means that you have more money coming in, so more income than you do money going out, which is expenses. Okay. And they usually want to see like you have a decent buffer on there. That way they know that not only are you going to be able to make your payments, but you at least are, you kind of are saving a little, or you have enough of a buffer where if something happens to you the next month, you're not really living paycheck to paycheck. You at least have some sort of savings so you can pay that house off for that month or however many months that you're either out of work or you're having any type of situation. Another thing they look at is if you have any collections, because whenever you have a collections account, you have to kind of think about how far or how long it takes to get a collection account, right? To get a collection account, you had to have had an account that went 30 days late, 60 days late, 90 days late, all the way to 180 days late. Then it was turned into a charge off. And then eventually it was sent off to a collections agency, right? So there's a lot of steps there that it takes for it to go from, there's a lot of steps in between you missing a payment to you having a collections account. Okay, so they'll typically want to see that if you have any collections account that has been paid off, or things like that. So you want to try to make sure you have as few payment collections accounts as possible. Typically, what I recommend if you're in a situation where you have collections accounts showing, you want to do what's called a pay for delete. And that basically means that you come to an agreement with the collections agency that if y'all work on a settlement, in that settlement, it's also included that once you make that payment, that they're going to actually delete that account from your credit report. That way, it's not going to show up there anymore. And whenever you do apply for a house, you don't have to worry about them pulling and seeing you have a bunch of collections account because you paid them all off and got them removed. Okay, so you always want to make sure that you're able to get those collections accounts removed from your credit score. Now, here's just a couple of the different types of loans that you want to look into. First one is going to be your FHA loan. Like, this is going to be one of the most common loans, great for first-time home buyers. This is going to be, is pretty much the bread and butter. A lot of people end up going with this loan, but they'll approve people with credit scores as low as 500, but you're typically going to need a higher down payment, and your interest rate's more than likely going to be pretty high. Okay, but again, they're going to approve you if you're at if you're at the 500s, right? If you're in the 500s, you can still be able to get approved. One thing I will tell you is, if you are in that category, or you're in the low 500s, I would say even if you end up getting approved for the house and everything, you still want to go back and improve your credit score. Okay, the reason being is you can eventually refinance and be able to get a better rate on that house, a better interest rate. That's going to end up saving you, depending on the price of your house, it could save you even tens of thousands, if not into the hundreds of thousands of dollars. Okay, so you always want to make sure that you're fixing your credit no matter what situation you're in. Now, I did shoot a video. I'll link it down below, which is going to teach you how to fix your credit step by step. So that's going to be a perfect video for you if you're not sure where to get started and you don't know what parts of your score you need to focus on the most. I'll link that video down below in the description so you can check that out, and that'll walk you through how to actually fix your credit. Now, two other types of loans are the VA loans and the USDA loans. Okay, now the great benefit of these two loans is they both have a 0% down payment, which means you don't put anything in. Now, normally when that happens, you might have a slightly higher interest rate because they're taking more of a risk. And the VA loans are typically going to be for anyone who was, from my understanding, anyone who is a veteran, right? So VA loans. You are going to be able to qualify for that and apply for that loan. I'm not sure about exactly how many times you're able to apply for that loan, but it's definitely something that you want to check out if you are a veteran or you are the spouse of a veteran. And the USDA loans, typically, from what I've seen, at least in my area, those are typically homes that are being bought outside of the, let's say more in the suburbs or even a little outside of the suburbs, right? Places that are a little more underdeveloped, you're able to get those, at least in my area. I live down in Texas. So those as well are 0% down payments. So those are great for anyone who's looking to not put as much down on the house. So guys, those are really going to be the three types of loans that I think is going to be really more of a game changer for you. There are more loans out there. What I'll do is I'll include information about these loans down in the description as well, so you can take a look at that. And that's going to be it for this video, guys. No matter what your credit score is, there's going to be something that you can do to reach your goals. It's just about what path you got to take to get there. Now, in this video, I kind of broke down a little bit about what you can do if you have a lower credit score than normal. Then you can just follow those steps and be able to improve your credit score, or just be able to qualify for a house depending on where exactly you are. So those are going to be your paths you can take. Again, guys, I'm going to attach a bunch of videos, including my how to fix your credit step-by-step video down below, as well as other videos on how to take care of collections accounts, how to take care of medical collections, hard inquiries, just all these different facets of your credit score. Even if you have a repo or bankruptcy, I'll attach that below as well. And just go on and check out those videos so you can fix your credit. Even if you get improved for a house, but you didn't get as good of an interest rate as you wanted, or your score was low when you got approved, you can be able to fix your credit score and then refinance to be able to make sure that not only that your monthly payments drop because you have a lower interest rate, but that you're saving money and you're not paying as much in the long run. Okay, so that's gonna be pretty much it for this video, guys. Make sure you hit this video with a like as well, and make sure that you hit the subscribe button down below so you don't miss any of my future videos. Alrighty, so that's gonna be it for this video, guys. I'll see you at the next one.